We'll start with Charlie from Bryant. He writes, I'm closing in on my retirement, and I'd like to move when I'm done with work. Really anywhere with a beach. Wouldn't we all, Charlie? But the prices on homes are stupidly ridiculous.
Stupidly ridiculous.
Yes, I agree, Charlie. And interest rates for mortgages have been skyrocketing on a roll, currently over 7%. Yes. Do I just invest my spare cash into stock and wait for a housing crash, or should I go ahead and buy a home anyways? I've got plenty saved separately to last me through retirement, so I'm not concerned about basic needs. I do still want to travel some and be able to host the kids and grandkids at the beach. All right, Charlie, thanks for that question. Boy, you talk about beach houses. John, you and I have explored this in our minds many times.
We have.
I mean, that is the ultimate retirement dream, and we don't want to discourage anybody from dreaming, but I think Charlie's thinking correctly in that stupidly ridiculous comment.
Yeah, and I have to say that I would not be a buyer right now of beachfront property because COVID really exploded the prices on any kind of real high-end property that's out there. And so let me give you an example of how frothy this is. And this happened a couple of years ago. I went on vacation to the 30A area of the Panhandle of Florida in the Redneck Riviera area, and was just, I think one of our friends connected me with a real estate agent down there, just, go look at some houses. And so I did. And really nice houses down there, very nice, comfortable, nothing extravagant. You know, the house in Arkansas might sell for about, I don't know, $500,000-$600,000, something like that. Down there is about $1.5 million. Well, when you begin to look at the history of that home, 2 years prior, it sold for $550,000, and today it's $1.5 million. Wow. I told the real estate agent, I said, I know you saw me coming, but you didn't see me that far away. So, there is a lot of froth in that market right now. So I would not advise acting right now to buy anything. There may be an opportunity if we have an economic downturn, something like that. That usually is a great time to begin to look at things like that. I know during 2008, during the big financial crisis of 2008, they were selling properties like hotcakes in Florida. It was like a rummage sale almost, that you could go down there and buy something very exquisite for very cheap money. Well, it ain't that way now. And so I think that the more flexible thing to do, Charlie, frankly, is to take a look at the rental market, the VRBO market, things of that nature. And that really does give some flexibility, Scott.
Yeah, I think you don't have to invest as much of your money for sure. And I think that it, I want to draw a line here between a couple of things. So I think if you're talking about, he said he really wanted to be with a beach, right? He wanted to move somewhere with a beach. So if you can determine whether your priority is to be on the beach or near a beach, that might make a difference in what I would say, because I'm in full agreement with you on the beachfront properties. But if you could look at, a couple miles off the beach, I look at Navarre Beach a lot, right? And I get the feeds from the realtors. Still, I like to look at it just to look. But those are a lot more reasonable. If you're willing to drive to the beach but still have the beachfront vibe on a day-to-day basis, I don't think that the ridiculously stupid or the stupidly ridiculous, as Charlie mentions, is really there happening on that level. And then the other thing too is people may be hearing, oh, don't get in the beach house market, don't get in the beach house market. If you're going to live there permanently is what we're really talking about, right? If you're going to rent it out, that may be a little bit different game because you will be bringing in income. But what Charlie's talking about is being a permanent resident,
right?
And that may not be the timing on that may not be the best.
Yeah, and I think if you really just stop and think about all the other costs that are involved in that, you've got insurance, which is a huge deal if you are on a coastline that is susceptible to hurricane. Florida is having a terrible time with property insurance right now. Property on the beach is very susceptible to hurricanes and things of that nature. So you've got that factor. You've also got the maintenance, the upkeep, the property taxes. this can be a money pit, and it'd be absolutely nothing wrong with the property. You've got the mortgage, you've got the higher interest rates, and yes, we are higher than we were before, but the interest rates are ridiculously low, were ridiculously low in the past, and they're more normalized now. People have a lot of recency bias about interest rates.
I actually looked this up. The long-term average mortgage rate in the United States is 7.74%.
Yeah.
So we're actually below the long-term average. So I wouldn't so if someone else is listening to us thinking about just buying a home in general, don't let the mortgage rate discourage you, because I think we're going to be, the term has been, and we did the fastest four on this just last week about higher for longer. That's what we're hearing right now about interest rates, right? We're going to be higher for longer, but are we really higher? Higher is a relative term. If we're on average, then we're really just going to be average for longer, and I do think that's going to be the case when it comes to interest rates.
Yeah, the pencil pushers in the back call it reversion to the mean.
Yes.
Yeah, that's everything kind of gets back to average, and that's what has happened with interest rates. It feels like they are high because we were in a low interest rate environment for so long, but it was abnormally low, and it was artificially low because the Fed was trying to stimulate the economy.
Yeah, if you got one of those mortgages at 2.75%, you're probably not likely to move. But if you have to move, if you're relocating, I would say don't wait for mortgage rates to go down. We are in the new norm. As we meet today, as we are on the air today, the Fed is meeting and announcing whether they're going to raise interest rates. The full expectation of the market is that they're not going to in September, but they may still down the road. But we are nearing the end. I think everybody's in agreement there. The near future, the end of the rate hikes are coming soon, but not to diverge too much from Charlie's question here, but I do want to bring this into play. John, we've been talking about, and we're going to have a question a little later about a recession. We've been talking about, is there going to be, when is it going to be? And it may still happen, but read today that we're expecting Q3 earnings growth now from S&P 500 companies. So what was an earnings recession is now apparently being steered out of it into an earnings growth period, which I think supports the theory that we're in we're going to stabilize where we are with rates for a little length of time.
Just remember, it's never as bad or as good as you think it is.